Hey, good evening. This is Hassan Dosani. Welcome to tonight's SBL webinar, day number 4, and I hope you guys are doing well. So let's wait for one more minute for people who are trying to join in, and then we'll start. Admin, the handout is not the right handout. Can you please change the handout? Admin? Admin, can you please replace the handout? I just forwarded you the today's handout. The handout which is appearing now was from yesterday. Thank you for pointing out, guys. Thank you, Wasim. Yeah, Dave, today's handout is just being uploaded. There was some technical hitch today. I'm good. Thank you very much. Yep, the handout is there now. Thank you, admin. Right, so let's start. Today's plan. First of all, we will discuss the exam technique of how to present your answer, important aspects. And then today's topics are very, very important. We will talk about risk management, we will talk about internal controls and project initiation document. Now, these two topics, risk management and internal controls, each and every attempt, there is a guaranteed question from these topics. Either one from this or one from this, or even one each from these two topics. So these are guaranteed topics in each and every attempt. So that is why this is very, very high importance from the exam point of view. And if you will note, I have kept 2 questions practice for risk management and 2 question practice for internal controls, because these are high scoring topics. And since we know that these are tested in each and every attempt, so it's better to be prepared as much as possible. Okay. Professional skills, we will talk about it will cover evaluation, which we already know what it is. Today we will talk about commercial acumen. We haven't spoken about it as yet. And then communication skill, you also know that. So this will be something new today. And briefing paper we know, but PID is a new thing. Okay, so let's get started. So those of you who are still not part of my global WhatsApp group can send me a WhatsApp message and I will add you to the group. Just note this number. Okay. So today's exam technique. how to present your answer. So this is applicable for both CBE students and manual students, that how you should present your answer, how it should look visually. So number one, linking answers to exhibit is a must. So you already know by now, I have been talking about this since last 3 days. So you know this. Adopt paragraph style of writing. One paragraph should represent one point only. So one point is one paragraph. If you need to write 4 points, I want to clearly see 4 paragraphs. Okay, do not try to put multiple points in one paragraph. You will lose marks unnecessarily. So please keep this in mind. One paragraph is 1 point. Very, very important, both for CBE and manual. Paragraph should not be lengthy, around 4 to 6 lines max for manual students. Okay, and then try to give many small paragraphs. Obviously, if you cover one paragraph, 1 point, so in there are 8 points, then there will be 8 small paragraphs. Now look at this. Leave one line between each para. It's very important that your answer is visually open. It's visually pleasing to the examiner's eyes, because that poor guy is checking, I don't know, 500,000 papers in a very short time frame. So something which is open, easy to read, visually not very, challenging, immediately he will fall in love with your paper. So try to leave one line between each paragraph. CBE students, you can press enter 2 times. Okay, so automatically there will be an empty row between the paragraphs. And avoid using bullet style. Just give small paragraphs. Do not give bullet style, because these reports and briefing papers and all these things, these are formal documents to the board of directors. So avoid using bullets. All right. High focus on the format. So very important. So whatever format has been asked in the question, make sure that you spend 1 minute in beautifying the format. It is very important that something which is going to the board looks very proper and nice. So format is very important. Look for stress words in your exhibits. What are stress words? Words like very, extremely, significantly, notably, highly. These are stress words. So if you see any stress word in your exhibits, try and use that sentence or that information in your answer. Why? Because since there's a stress word, it means that it is an important piece of information. Okay, so make sure that you don't miss those sentences which carries any kind of stress words. Try to use them. Make sure that you use them in your answers. And use of models is not mandatory. So if you think you don't know the model, if you think you struggle with the model, don't worry about it. Just make sure that you give a logical, a logical flow answer covering all the important aspects. Again, the board is not interested in your models. The board is interested in your analysis, right? So you can also give a good analysis without using a particular model. So do not stress out on model. Do not focus extra on models. A lot of students, they try to do all kind of stupid models in the syllabus. They're wasting their time. Okay, any questions so far? Let me go through the question box. Okay, no questions. Good. Okay, recommendations. You are not supposed to give recommendation or conclusions on your own. I mean, stay away from giving recommendation or conclusion of any sort unless the question specifically says that please give recommendation or please include a conclusion. Then of course yes. But if the question is silent, if it just asks you to evaluate a proposal, you just talk about pros and cons. Forget about conclusions or recommendations. Okay. But in a scenario where the question specifically asks you to give recommendation, then when you give a recommendation, then your recommendation should be supported with justification as to why you are saying what you are saying. Okay, one solid point should be supporting your recommendation. Now sometimes one requirement asks for two things. In that case, give two separate headings for each requirement. So I've seen this in SBL that the examiner kinds of asks two different things in the same requirement in the same question. But since they are two different things, try and make sure that you answer both of them. And the best way to make sure is you give subheadings of each of them so that you can give 1 or 2 points under each of them. For example, can you see? I've given this example. Assess the role and value of non-executive directors. Can anybody tell me what are their two things required here? It says assess the role and benefits. So what are the two things here? Role and benefits or value. So I would expect to see role, couple of paragraphs, and then value, and then couple of paragraphs. Okay, it's very important that you break. Another example. Write a memo which discusses the ethical and reputational concerns raised at the meeting. Now, ethical concerns are something different and reputational concerns are something different. So if you are easily able to bifurcate the two, then it's better. It's suggested that you give one heading called ethical concerns, give few points for ethical, then move to reputational concerns and give few points. And this one, what is the impact of external environment on our business? So first you will need to analyze the external environment and then you will talk about the impact, right? So these are two separate paragraphs. So just try to break it up. Try to make sure that you read the requirement very carefully so that you don't miss out on the requirements which is expected from you. Okay. Now, if the question asks you for identify weakness and recommend improvement, use a tabular format. I think we did this yesterday. Remember yesterday that we did a question on weakness and recommendation on the corporate governance. So I made a table on the CBE format, a nice table. One column is weakness, one other column is recommendation. So please, whenever you get a question on weakness, recommendation, or main risks and recommendations, use a tabular format. It's always will help you get extra mark. Any questions on the format of your presentations? Bullets are useful in slides. Yes, so for slides, in the slide you will use bullet. Muhammad Amir, no. Please don't use tabular format for anything else. Just recommendation, weakness and recommendation. Okay. No, Mahagna, no. Yes, Hassan. The question we did on day 2 asked for financial and non-financial. So it's better you give two headings, financial performance and non-financial. Very good. Very nice. Satish, I think today is your first class. That is why you're asking such questions, that if I don't use models, will I lose marks? So please watch my day 1, day 2, day 3 videos and you will know what my view is. Sir, what about advantages and disadvantages? Yes, why not? It's always nice to give a heading advantages and then disadvantages, right? So why are you asking such basic questions? Do we mention question number? Yes, of course. All right. I think there are lots of new students today who have not yet seen my day 1, day 2 and day 3. That is why you're asking those questions which I've already explained in lots of details multiple times. So please watch those videos. Okay. Now, before we start risk management question, I would like to remind you how to ask questions. The only way to ask question is that you type your questions in the question box, but please make sure that your questions are relating to the topic under discussion. Do not ask any questions outside the topic under discussion. Towards the end, I will allocate 10 minutes for all kinds of questions, but not during the presentation. During the presentation, please stick your questions to the topic under discussion so that everybody can benefit. Right, very important topic, risk management. So, do we know what is a risk? What is the meaning of risk? Risk of fire. So, a risk is an incident which, if it happens, may cause harm or damage to the organization. This is risky. Don't do it. This is risky. Risky is always used in bad sense, right? Risky means that it will cause you damage. To risk. Risk management, all those steps and precautions which we take in order to either remove the risk or avoid the risk or mitigate the chances of the risks. Okay, so similarly, organizations, they also face a lot of risks. And here's the list of all those possible risks which organization faces. So when an organization, when they face risks, what should they do? Then they have to implement proper risk management procedures. They have to avoid or mitigate the risk so that if that bad thing happens, the organization is already well prepared and they can control the damage. So risk management is very important from a going concern point of view as well. Because if something bad happens which significantly affects you, you might just not be able to continue your business. So risk and risk management. Are you clear on the concept? Now, there are several or numerous types of risks which our organization faces. Every organization, they face these kind of risks, and you must be familiar with the names of the risks. Okay, so let's start with something easy. Let's see whether you know what this. Can anybody tell me what is the meaning of reputational risk? Let's start with something easy. Reputational risk. Think, what is the meaning of reputational risk? Let me see your comments. Damage to our reputation. Excellent, Hamza. Hamza, you are on fire today. Damage to your reputation. Very good. Goodwill, image. Is it good? Reputational damage to my reputation. Is it supposed to be good or bad? It's bad, right? It will cause damage. We will lose customers. We will lose market share. So reputational risk is something really bad. Very good. How do we protect ourselves from reputational risks? Can anybody tell me? And again, this is no chapter, no syllabus. It's just common sense. How can organizations they can minimize the risk of reputational damage? Very good. Compliance with laws, focus on good quality, ethical measures, better reporting, fair behaviors. Very good. Transparent, CSR, proper. I'm impressed. I'm impressed. Okay, 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 okay. Better internal controls. Very nice. So, very good. So, the only way to avoid reputational risk is then you don't do anything wrong. Okay, very good. Another one. I'm starting with the easy ones. Health and safety risk. Think. Health and safety risk. What it means. Health and safety risk means health hazard or injuries, not welfare, Tom. Accidents, yeah, health and safety. Accidents, injuries, deaths, disabilities. Okay, health and safety talks about injuries, accident, health issues like breathing issues and accidents, deaths. To whom? Accidents, injuries, deaths to whom? Employees? Yes. Who else? Just employees? Customers as well. Very good. Don't you think there is a small chance that your customer might get injured by using your product? Customers and suppliers and society and public, whoever human being or person who can get injured from you, whether he's an employee, a customer, a supplier, a visitor, a society, a public. If it's a person who gets accidentally injured by you or dies by you or become permanently disabled, that's health and safety risks. The risk of fire, people will die. And how can you prevent or mitigate health and safety risk? How can you prevent this one? Insurance? Oh God, no. By implementing, proper safety measures, compliance with health and safety laws, internal controls, fire extinguishers, proper safety management, safety gears, make sure that your factory or your workspace is secure, it's not risky, train the staff. Very good. Insurance is once the event happens, it's post event. I'm talking about how you can prevent. Insurance will not prevent, it will just kind of compensate you once something bad happens. Okay. Can anybody tell me credit risk? What is credit risk? The risk that credit risk means the risk of what? The risk that customers don't pay. Very good. Non-payment, customer payment default. Excellent, guys. And how can you avoid or mitigate the credit risk? Proper credit controls, have a credit policy. Very good, Mohsin. Have proper credit policies. Analyze the customer, regular monitoring, And then there's someone was saying factoring, debt factoring, credit list from agencies. Very nice, very good. I'm impressed. Now, how about foreign exchange risk? What does this means? Foreign exchange risk. Currency fluctuations, yes. So if the organization is exposed to a foreign currency, for example, if it is importing something or exporting something, so then it is exposed or it is dealing in foreign currencies. So of foreign currency risk is adverse movement in the exchange currency rate. And how can you prevent it? Hedging, forward contracts, swaps, excellent. Hedging, forward contracts, swap arrangements, future contracts. Very nice. What about liquidity risk? What does this mean? Liquidity risk. Liquidity risk, cash flows. Yes, liquidity means cash flows. You don't have cash problems. You don't have sufficient funds to pay off your current liabilities. And how can you prevent liquidity risk? Yeah, proper cash management procedures in place, proper working capital management in place, having running finance arrangement in place, proper planning, timing of payments and collections, chasing your debtors. Very good, very good. You guys are today very impressive. I just hope and pray that you guys are as active as you are right now in your exam as well. Now let me make, what about, okay, this is again an easy one. Legal and compliance risk. Legal and compliance risk. Yeah, not complying with the law. So this is more applicable for those industries where there are numerous regulations. And when there are numerous or complicated regulations, there is a risk that you might miss out. And then of course, if you don't comply with the risk, it may also lead to reputational risks. Very good. So in the industries like banking, you know that banking has a lot of regulations by central bank. There's Basel. So the risk of legal and compliance risk is generally high in banking sector because of the nature of the industry. Can anybody tell me what is this? Environmental risk. Environmental risk. Environmental. Now it will get a bit difficult. Environmental is pollution or ecological pollution, earth, carbon emission, oil and gas. Very nice. This is more applicable to manufacturing industries where there are huge plants and machineries and industrial setups where there are pollutions and wastages and emissions. Oil and gas industry, this is very, very significant. Chemical slippage, very nice. Deforestation, wow. Cut trees, yes. How can you minimize environmental risk? So we try to use recycle, environmental friendly production processes, recyclings. We try to replace plant new trees by reducing environmental footprint. Green energy, moving to green, like moving to solar, wind energy, solar energy. These are called alternative energies. Very nice. Plant new trees. Very good, very good. Why are you guys not getting stuck? Political risk. Let's see. What's the meaning of political risk? Pastel. Remember political? Political risk? Not recession. Political. Government. Yes. Anything to do with government is political risk. Government uh, instability. Frequent government changes. Frequent changes in government policies, political uncertainty, riots, wars, distortion in peace, all these things is political uncertainty. Taxes? No. Okay, I don't know. How can you minimize political risk? Now this is difficult. Wah, Abu Bakr, wah, very good, Mahagana. Move to other countries, yes. Wah. So if there is political uncertainty in your country, then don't put all eggs in one basket. Then you move to other countries, or you have business in other countries. You geographically diversify so that if something bad happens in country A, still your business is running in country B and country C. Very good. Contracts with government? Not really. What will your contract with government, will it affect a political uncertainty or riot situation? No. Pay bribes? Khizar, I will shoot you. Never ever pay bribes. You will lose your membership. Outsource? Elvin, you crazy? Outsource what? Oh, you're joking. Thank God. Okay. Now, the talk of the town, technology risk. You know, each and every business is now highly dependent on IT, internet, websites, softwares, plant and machineries, automations, technology, right? Extremely high dependency. Technology risk. Technology risk, can you think? Very good. That those technologies on which we are dependent, our business, those technologies on which our businesses are dependent. If something goes wrong with those technologies, you are screwed, right? So if I am teaching right now, I'm taking online classes. There's a high dependency on internet. There's a high dependency on power supply. There's a high dependency on this stupid thing. Can you see this? This is with what I write. So ACCA, they asked me whether I have a backup generator, a power supply. So I told them I have a laptop. So even if the power goes out, the laptop will automatically switch to battery. Then they said, do you have another internet line? I said, yes, I do have an internet backup line as well. And then they said, what about this? Do you have an extra nib? And I said, yes. It's all here with me. So technology risk, you need to have backups, you need to have alternative plans so that you can mitigate. Intellectual risks. Intellectual risk, intellectual property. You remember intellectual capital. Intellectual are intangibles. Intellectual risk means, let's see what you guys got to say. Yeah, skilled staff, research, ideas, copyrights, patents, trademarks, your key employees leaving you, very nice. Now, there's few more. Do you know what is a Operational risk. Can anybody guess? Operational risk. Something which can disrupt your day-to-day operations. Right. Very good, guys. Something like, for example, there is high dependency on few suppliers, the supplier vanishes, or the plant and machinery breaks down, or anything which can affect your manufacturing or your process or your operational activities is operational risks. What about, have you heard of something called market risk? This might, you might have heard in finance as well, market risk. So liquidity risks, credit risk, interest risks, market risk. Do you remember? I mean, maybe in some other subject, stock markets. Yes, market risk means that if you have invested in some shares and then there are adverse movements in the prices of those shares, or even adverse movement in the share prices of your own company. So market risk is to do with share prices. What about competition risk? Competition risk, very simple. The risk that the competition will increase, which might force you to squeeze your margins and you might lose your market share. Now, the two most important, I was playing with you and you were playing with me, but now the two most important risks, and I will change the color. Financial risk. Think. Financial risk. Funds not available, gearing going up. I'm just able to read. Unable to obtain capital. Very nice. Loss making. Very good. Financial problems, going concerns, adverse debt equity, low profitability. Oh, bang on, guys. Going bankrupt, financially bankrupt. Yes. Very good. So financial risk means that the companies, I want to write revenues or sales are going down. If the revenues are significantly going down, it means that your profitability will go down or you might end up in a loss or continuous losses, or you are now at the verge of getting bankrupt. These are all examples of financial risk, starting from your P&L, your P&L performance. If it's worsening, then you're going towards financial risk. If your balance sheet is getting weaker, you're going towards financial risk. If your gearing is going up, you're going towards higher financial risk. So can I say continuous losses is financial risk? Yeah, it will lead to a financial risk. How can you avoid or mitigate financial risk? Good performance, yes, good business performance, good strategies. Make sure that your sales are healthy, they are growing. Diversification, that's word. Through diversification, you can maintain the revenue streams. Make sure that your costs are under control, they are not growing, out of proportion. Better bottom lines, monthly review of variances and KPIs, constantly looking at the business performance so that you can take corrective preventive actions and update your strategies so that the business doesn't go into a financial crisis. And the last one, business risk or strategic risk. business risk or strategic risk? A business risk is that the entire business is at risk. Like a going concern thing, you might lose your regulatory license, or your the existence is doubtful. So business risk is something very bad. So COVID. Okay, let's not talk about COVID. First understand, then I'll explain how COVID fits in. So business risk is that maybe your product gets mature or obsolete and suddenly you're out of business, like cameras, and Nokia went out of business because it never focused on smartphones. So Apple was out of business before it relaunched with iPad and iPhones. Strategic drift, very good. And strategic risks means that your strategies are wrong. Strategic risk means that your strategies are not bringing the desired results. So strategic risk and business risk are very similar. So now, listen carefully. Financial risk. If we don't control financial risk, do you think it will eventually convert or upgrade into business risk? You see, so financial risk is that you're financially getting weak, and if you don't address it, it will ultimately convert into a business risk, and then the entire business will boom. So all these risks, they start small and then suddenly they start upgrading, and then ultimately the baddest thing is business risk. Second baddest thing is financial risk. So all the other things, reputational risk and compliance risk and technology risk or liquidity risk or credit risk, they will all ultimately lead to financial risk, because they will all ultimately affect your P&L. And then the financial risk will then convert into a business risk and you're gone. Very good. Very nice. I'm genuinely impressed today by the way you guys participated, and honestly, I've taught like five this is my fifth webinar, and in all the 5 batches, you guys are the best. Don't get happy, but you guys are the best for risk management. You were on top of risk management. Very good. So what kind of questions do you expect? The most common question is identify the main risks and then suggest mitigation actions. That's the most common question in SBL on this, from this topic. Identify the main risks. The most biggest mistakes which students make in this type of question is they talk about risk, but they don't name the risks. It's very important that you name the risk first. In your answer, you should use these words. You must tell the examiner which, if the examiner says identify the main risks, then you must pick up the risk from this list. You must use words like credit risks, operational risks, foreign exchange risks, reputational risks. Use these words. If you don't use these words or the name of the risks, you will not get marks. Okay, that's very important. Maybe AC chala de biscuit. Any questions? And we will do a question on this. Now it's easy. Why risk varies? So do you think that all companies, they face same level of risks, or the risk varies from companies to companies? Right? Of course, risk varies from companies to companies. Why? What are those factors? Very simple. It depends on the size of the company, small company or big company, the geographical location, the growth phase, the business model, the financing structure. I can also say it depends on the nature of product and industries, right? So risk varies from company to company. Similarly, do you think risk varies from industry to industry? You think that all industries face the same type of risk or the same level of risk? No. For example, a banking industry will face a completely different type of risk. It will face credit risks and legal compliance risk versus a oil and gas sector. They will face environmental risk like pollution and health and safety risk like accidents and fires. So it all depends on the nature of the the nature of the product, the level of investment, the regulations affecting that industry, the ecological aspects, the technological aspects. So these are some very basic common sense reasons why risk varies from company to company and risk varies from industry to industry. Tissue. Now the next topic is risk diversification. It's very important. In fact, it has been tested. What is the meaning of risk diversification? One is diversification. We diversify a lot of things. Risk diversification. So you must have heard the old saying, don't put all balls in one basket, right? Is it balls? Is it, what is it? Don't put, oh, okay, it's eggs. I beg your pardon. Yeah, don't put all eggs in one basket. Why? What's wrong in that? It's easy to carry, right? No, because if that basket falls, all your eggs will break. Exactly this philosophy is applied for risk management. When we say risk diversification, we have to diversify as much as possible so that if anything bad happens here, we are still safe and covered because not all eggs were sitting here. Okay, so when we talk about diversification, there are three levels of diversification. Three levels. Number one, product diversification. That's the first thing you do. Product level diversification. Do not ever rely on one product, because as and when the product becomes mature or the competition becomes intense, you are gone. If the product becomes obsolete, you are gone. If customer trends changes, you are gone. So never. So product diversification. The second, once you have several products, then you can think of the next level, industry diversification. Then you try to diversify industries. It could be something related to your existing field, or it could be a completely unrelated industry. It depends on you. But then don't put all eggs in one industry, because if that industry suffers, you are gone. Then diversify left, right to other industries as well. And the third level of diversification is geographical diversification. Now, do not put all eggs in one country or one city. If you are in one city, try to expand to other cities. If you are already in various cities, then time to diversify into other countries. Easy. So whenever you see the word risk diversification or diversification, always talk about three. I want to see three subheadings: product diversification, industry diversification, geographical diversification. Any questions? Yeah, light on your right. Sometimes they can apply to big companies. Yes. Product, industry, and then ultimately geographical. The risk mitigation strategies, forget about it. Not very important, but in a good organizations, those organizations who take risks seriously, who takes risk management seriously, you would expect to see these things in a good organization who are conscious of risks and risk management. First of all, you will see the culture of the organization will be very risk averse. They will take risk seriously. They will have a formal risk committee. Remember risk committee? So all good organizations will have proper functional productive risk committees. Then they will adopt some risk management framework, some TARA strategies, whatever. There will be proper risk manager, and then there will be risk audits. A risk manager is a person like a finance manager or audit manager. A risk manager is a person who specializes in risk management. He's educated, he's trained, he's experienced. All right, so it's done. Risk register. What is a risk register? It is a formal document in which the organization writes all its risks, and then it shows the level of the risk, whether this risk is high or medium or low, and then it shows what are the steps the organization takes or is taking to minimize that risk. So a risk register is a formal and an important document which all good organizations they maintain and they update it regularly, because risks are dynamic in nature. And the last topic for risk is advantages of risk committee. So recall yesterday's classes where we talked about board committees, and we said that what are the advantages of board committees? They are more specialized, they are more focused, they can give more time, the board can focus more on strategies, blah, 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 blah. Exactly same you will replica here. So what are the advantages of risk committee? It is more focused, it is more specialized, they can spend more or extra time as compared to the full board. The board can focus more on strategic matters, higher involvement of NED, higher shareholder confidence. Same thing. And whenever you get a question on risk management, please try to adopt a tabular approach and assume 3 marks for 1 risk. Okay, this we know by now. Are you guys ready for a question? So this is March, June 2019. Question number 1B, smartware. One B. So let's read the requirement first. Assess the major risks presented by smartware's current business model and suggest appropriate mitigating actions to manage these risks. Assess what? The major risk and suggest. Which format? Immediately by default, your brain should tell you which format. Can anybody tell me which format to use? Tabular format. What is Tara? Come on, don't complicate. Tabular format. And how many marks per point? Very nice. So can anybody tell me what is, how much is this part worth for? So this is 10 marks. 10, how much is technical marks? Plus, how much is professional? Normally, it's like if it's 4, we divide by 2, right? Normally, that's what we do. If the professional marks is 4, we equally split between the two parts. But in this case, it's a bit different. So let's read the professional skills. Professional skills marks are available for evaluation skills by assessing the identified risks at smartware objectively. So it looks like the professional skills entirely pertains to part B, because it says that how you will score evaluation by assessing the identified risks, and part A doesn't talk about risks, it talks about environment, which is pestle. So in this case, the full 4 marks, so total 14 marks, correct? Divide by 3. How much? I think 5 risks, more or less. Okay, agreed? So now the question is, assess the major risks. So first we need to identify, right? Then we can talk about the risk. So when we identify the risk, which list we have to use? This list. So when we are asked to identify or assess the risks, we need to use words from this list. So let's start. Please read the first 2 paragraphs and let me know if you are able to identify any risk. Right. The first paragraph, I saw the political uncertainty. Which risk is that? You need to look at this list. Political uncertainty can go under which heading from this list? Political risk, very good. Economic risk, we'll talk about economic risk. So this one is for sure something called, okay. And I've also highlighted this one. It sources its products directly from suppliers in low cost economies. Does it give you any hint that my suppliers are in cheap countries like China, Philippines, Nepal, India, Pakistan, Bangladesh, Vietnam? And where am I? I am a highly developed European country sourcing its products from low cost. So what is the risk here? I can think of two risks from this list. The easy one is this. Do you agree? Do you think there's a foreign currency risk? Why? Why is there a forex risk? Credit risk? No. Legal risk? No. Very good, Gabriela. Business risk? Are you crazy? You think your business will go into a going concern because you are purchasing from China? No, Manur, no. No, Amir. What's wrong in purchasing from low-cost countries? I am based in Europe, which is an expensive country. I am purchasing my raw materials or products from low-cost countries. The entire West is doing like this, including Apple and Nike. You guys are saying reputational risk and strategic risk and business risk. Are you crazy? Delivery risk. Did you see the word delivery risk on my list? Geographical risk. Did you see the word geographical risk on my list? Please don't be creative. Nobody is asking you to create your own fancy risks. Pick from this list, idiots. Crazy, crazy. Theoretically, you were very good, but when it comes to the application, you become dumb like Mr. Bean. When you buy products from other countries, there's nothing wrong. It's not a legal risk, it's not a quality risk, it's not a geography, nothing wrong in that. What's wrong? The entire world runs on import and export. What's wrong or what risk is foreign currency risk? Because yes, since you are buying material from outside other countries, there's a forex risk, obviously. And to some extent, there will be operational risks in the sense that if those suppliers, if something bad happens to that country, or the ship, goes into the sea deep down, drowns into the sea, or so it might disrupt your continuity of production. Why do you need to complicate and think 4 floors up? Didn't I tell you that the board of directors are small kids? So don't complicate and think at the advanced level. Keep basic. God. If we don't get materials on time, it may delay operations. Yes, so operational risk is good. Reputational, why reputational? I don't know why you directly jump to reputational. Those are secondary risks. Tell me the primary risk on your face. Currency risk and operational risk. That's it. Someone is saying liquidity risk. Oh, I'm giving up. Sorry, guys. I'm not taking responsibility to make you guys pass. You guys are good accountants, but not good business guys. Okay, forget about everything. When you buy or sell, when you buy from outside the country, foreign currency risk, and to some extent operational risk. When you sell to someone outside the country, again foreign currency risk and to some extent credit risk. Okay, simple. Do me a favor, keep it simple. Memorize it. Okay. Oh God. Move on. The question hasn't even started yet, and you guys, going completely bonkers. Economic risk. Do you see this word economic risk in my list? Do you see the word? So if economic risk is something so big, don't you think I would have included that in my list? So there's no such thing as economic risk. The economic risk will ultimately impact your revenues, right? If there's a recession, if the people are unemployed, their disposable income is down, what it will do to your company? It will affect your revenues, your profitability. So okay, now let's move to the exhibit where there are some more risks. Now please read this box and see if you're able to identify what risks are we talking about, and please this time stick to this list. Do not be creative with your own names of risks. Time starts now. To me it's very simple. Which risk? Their financial statements is deteriorating, their revenues and profits are going down, they have high costs. Please, for God's sake, do not make my blood pressure go up this time. What do you think? Which risk? Financial risk. Very strategic risk. But anyway, that's just one or two stupid guys. Financial risk. It's just financial risk, okay? There could be other risks, but I just want one risk, which is the primary risk is financial risk. Good. Thank you. Well done. Now the other next one, let me write. Financial risk. Okay. Now what about this one? Significant fall in share price value. It's not on this list. I think I had written it by hand. I rub it out. But tell me, significant fall in share prices. What risk is this? Market risk. Very good, guys. Very good. Very good. Now this one. Deplete cash reserves. That's the keyword. They are not able to give dividend because it will deplete their cash reserves. Cash reserves. What do you think? Third one. Liquidity risk. Anything which affects your cash balances shows that you are weak on your cash positions, and if it affects your cash balances, it is liquidity risk. Excellent, guys. Now you guys are on track. What about this one? What happened? The last one. Whoa. The strategic direction of the company is completely wrong. Strategic direction is completely wrong. Look at the first one. Do you see something? What is strategic risk? That your strategies are not bringing the desired results. It's not working. Strategic risk. Very good. So now 1, 2, 3, 4. All right. So we were able to find 5, 6 risks. So what was the question? Assess the major risks presented by smartware and suggest appropriate mitigation actions. How do we draft it? We need an opening sentence. So I will copy this, Control C. I will go to the Word document. I'm not using the CB platform for this question because this question was not available on CB platform, I think. I'm not sure. We will write question number. Following is the assessment of the major risk presented by smartware's current business model and suggests appropriate mitigation actions to manage these risks. That's your opening sentence. I will insert a 2-column table like this. I will say major risk, and here mitigation actions. I like to use the word used by the examiner. I would Control B, Control E, increase the font size, leave one line. What's the first one? Political risk. Second one. Third one. Third one. Fourth. Which one was fourth one? Market share, market risk. Fifth was, I think, liquidity risk. And sixth one was strategic risk. So we need 5, so you can just delete one, whichever you think is difficult for you to explain. So political risk. First, I will copy the facts from the case. The country is also, what's the name of the country? Noria. Noria is experiencing political uncertainty because of its coalition government, who will not last for its full term office. So now what's wrong with this? If there is political uncertainty and the government may not complete its full term, so what's wrong? What's bad in this? Why we are saying it may cause us harm or damage? You remember, after stating the fact, we need to explain to the board why we are saying it's a risk. What's wrong in this? So let's see. Instability, very good. Economic instability. Political turmoil. What about government policies? If the government is no more there, their policies will be changed by the new government. So continuity. So this is my wife, and she's a doctor, but she knows these things. I don't know how. Maybe she has common sense. Maybe she's not an accountant. That is why she's thinking like a common person. Yes. So just whatever you can think, whatever you can write, just write the reason. No problem. This means this could adversely affect the government, the existing government policies, as the new government might wish to change policies. Also, it may cause some uncertainty in the business environment. Blah, blah, blah. You can go on, but I don't want to go on. This is enough to convince the directors that your point, why you have taken the point. Now, what is the mitigation action? What do you recommend? How can Noria mitigate the risk of the political risks? What do you think? Start with product diversification. Oh God. Move into new countries. Geographical diversification. Yes. Don't put all your eggs in this country, because this country is a little bit risky now. Present, very good. So now read the case. I think you guys did not read properly, which is fine. So they already are operating in 2 more countries. So let me use this information. Why not? The more I link with the case, the more marks I will get. The best way to mitigate political risk is to have business in more than one country. Okay, so don't say move your business. Move means that you are winding up and moving. No, 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 that doesn't mean move. You know, spread. Was smart where already operates in 2 other countries on the European continent, which is Southland and Centrum. It may consider more spreading into more similar countries. Khalas. Simple hai? Basic. Don't overthink. Now today I'm convinced that you guys overthink because somebody has told you that SBL is so crazy difficult, SBL is so complicated, so that even when you see a simple question, you tend to overthink and go in a wrong direction. Keep it simple. See the nice presentation? I'll do one more for you and then I'll move on. Which one you want me to draft? What about foreign currency? Or you want me to draft something else? Whatever you say, I will draft. One more point for you. Financial risk, market risk, liquidity risk, strategic risk. Which one you want me to draft? Market risk? Okay. Okay. Majority are saying market risk. And I think it's a good choice. Market risk is a bit dry. So market risk. First, I will mention the, where is market risk? Large institutional investors contacted me. Okay, so let me copy paste this. What's wrong in this? If the share prices are going down and there are dividends will not be paid, what will happen? The company will lose its market capitalization value, reputational risk. All the shareholders will try to get rid of the shares. It will fall down further, and then the company might face some financial issues. Kalas. Easy. What do you suggest? Simple. Layman language, 2 sentences. You tell the board and khatam. Any questions? So now this question is for your homework. You can do the rest. But the main thing is whenever I'm just doing a recap now. Whenever you guys see a question on risks, something like identify the main risks, or assess the main risks, please use the risks mentioned on this list. Do not be hyper creative. There are few risks missing from this list, like operational risk and market risk and competitive risks. But please try and name the risks from this list. Otherwise, you will not get marks. Okay. There's one more question, a very short question. Or do you want a break now? Break? Okay. Yes, Usman, you can. Manur, yes, you are right, but the information available does not tell you anything, so do not assume other stories. Niharika is saying, how do you know where to look for? Yes, that's important question. How do I know where to look for? So sometimes the question suggests, sometimes the name of the exhibit will also suggest, and sometimes it is from experience. When you keep your eyes open for keywords, and if you have made the list of requirements, you remember on day one, it will help you. What about use of Tara in this question? No need. Again, you are overthinking. The question says assess the risks and give mitigation. And I have told you 1,000 times, use of models is not mandatory. So why don't you do it simple? You identify the risks and just give common sense solutions. Tara model is a model. Why do you need to want? Why do you like to use model and do a suicide? Up to you. Why don't you jump from a 10th floor then? Easy. We pay dividend from retained earnings? Not really. First, the profit goes into retained earnings and then we pay dividend. Now, don't talk to me like an accountant. This is not an accounting course. Economic recession is a financial risk. Yeah. Yes, Abu Bakr, it's possible. Yes, Antonella, please watch my previous webinar, day 1, day 2, day 3, and you will get the answer. Let's take a break now. and then we will start fresh. I admit that this was a heavy session. I was making you think and making you talk. So you must be tired. So 15 minutes break, and then we will change the flavor. Okay. So your break starts now. It's 10 p.m. So 15 minutes sharp. See you guys. All right, guys, welcome back. And if you can see me and hear me and see the screen, please can you type yes? Very good. Thank you very much. So guys and girls, are you now very clear how to handle a question on risk management? If it says identify the key risks, do you know which list to use and then how to give a mitigation action? Okay, let's do one more very short question, a very interesting question. It is September 2018 paper. It's an actual paper called Co-Fault Construction, question 3C. Let me close this one. And September 2018 paper, question 3C. Prepare a briefing paper for CC's next board meeting, advising the board of the advantages for CC of establishing a separate risk committee. 8 marks. And professional skills marks are available for demonstrating commercial acumen, skill in identifying the benefits that would be relevant to CC in establishing a risk committee. 2 marks. So total marks is 10 marks. So this commercial acumen is a new one which I will just teach you in a bit. The question says advantages for establishing a separate risk committee. So can anybody remind me the advantages of having a separate risk committee? Yeah, it is more focused, more specialized. They can spend more time. The board can spend more time on strategic issues, higher involvement of NEDs, higher shareholders confidence. Okay, so this company, it doesn't seem to have a risk committee. It's mentioned somewhere that the audit committee is also overseeing the role of risk committee. It's mentioned somewhere. Okay, I can't remember, but it's for sure that this company doesn't have a risk committee. So please, can you guys read this portion? And it says it's an extract from the risk report section of annual report. And we need to identify the benefits of having a separate risk committee. And at the moment, these guys do not have a separate risk committee. And the role of risk committee is done by the audit committee. So read and then we will discuss. I need you to identify at least 3 to 4 benefits of risk committee. One more minute. Right. So the question is, identify the advantages of having a separate risk committee, and currently the risk committee role is being done by audit committee. So can you guys think of at least 3 to 4 advantages from by having a separate risk committee? Give me one advantage first. Okay, Gulkan. Can I say focused? That's number one. One of the biggest advantage of having any committee is that that committee will be focused. They will be focusing. That's the whole purpose of having smaller committees, so that they can focus on the mandate or the role or the function. So right now the audit committee, what is the role of audit committee? Do you remember? They look at financial statements, they look at internal controls, they are supposed to look at external auditors, they are supposed to look at internal auditors, they are supposed to look at whistleblowing. So they already have their hands full. That is the main role of audit committee. So do you think this audit committee, if they are also reviewing the risk management activities, would they be able to focus on it? It says, how can I link with the case? Can I use this sentence? The committee is just, they're not focusing on risk. They are focusing on the audit committee matters. So for the risk matters, they have a general responsibility. They are not focused. So now the interesting thing here, which I want to explain, is that the data given is about audit committee. The data given here is about audit committee. There is no mention of risk committee, simply because there is no risk committee. And we have been asked to identify the benefits of risk committee. So how do we link with the case? So we'll pick up the limitations from this audit committee and then link it to the benefits of having a separate risk committee. So focused, we will say that currently the audit committee has a general responsibility for promoting risk management. They are already doing lots of things like external audit and internal audit and financial statements. If we have a separate risk committee, that committee will be able to focus more specifically on risk management matters. Second advantage, specialized. So tell me, the audit committee members, it says all committee members have accountancy or finance qualifications. So do you think these guys are fit to do risk management? That's a completely separate skill set. So then this means that audit committee, because they have all the members have accountancy background, they are not specialized in risk committee. And having a separate risk committee would mean that we will induct those directors who have experience in risk management, hence bringing more specialization into the committee's role. See how the examiner wants you to link. Third, more time. We will say that the audit committee is meeting every 3 months, and in those every 3 months they first talk more about their own primary mandate. They might not be able to give extra time for risk management matters. And then next paragraph, having separate risk committee would mean that that committee would be able to give dedicated time to risk management matters. Okay, and fourth, the board can focus more on strategic. So currently the board formally reviews risk as a regular part of its agenda. That means they are spending some time on risks. So if we have a separate committee, the board can definitely reduce the time it spends on the risk management agenda. And fifth, what about these guys? So there is a risk manager in the company, there is a health and safety manager in the company, and these two are reporting to audit committees. And audit committees are finance guys, and unfortunately the risk manager and health and safety managers are reporting to finance people. Doesn't seem like a good fit. So if we have a separate risk committee, then these two guys who actually specializes in risk and health and safety can then report directly to the risk committee, which makes more sense because their job is more aligned with the risk committee mandate. You see how the examiner asks you the question? He doesn't want a theoretical answer. He wants your answer to be linked with the exhibit. See, such a small paragraph, and he asks you a question for 10 marks. This is how you link. You will say, many students said that, sir, there is no information about risk committee. Yes, of course, there will be no information because there is no risk committee there. So we will twist the audit committee information because the audit committee is currently overseeing the risk committee. Interesting, short, but interesting. What do you think? Any questions? Yes, the risk committee, they report to the full board. Yeah. Okay, guys, let's move. Now the next topic is called internal controls. Again, a very important topic from exam point of view because almost I think in every attempt there is a question on internal controls, and a typical question would be like identify the weaknesses and recommend solutions and give recommendations. Identify the weakness and give recommendations. Very common sense topic, this one. No theory, no model, no book, no syllabus. Very common sense smartness is required. So what are internal controls? So this chart will help you understand the big picture. So all companies, they have risks, they face risks. Yeah, we just studied risks. And then how do they mitigate the risks? One of the way to control and mitigate risk is to have proper adequate internal controls in place. So why do you have internal controls? So that you can manage your risks. What is the definition of internal control? It's a network of systems established in an organization to provide reasonable assurance that the objectives will be achieved and the assets will be safeguarded. Whatever is the definition. So internal controls are there to minimize the risks. So how do we know that internal controls are functioning properly? Then there is internal audit. So it is the job of internal audit to review the internal controls to make sure that they are working properly and to give assurance to the board that the controls are working as intended. And then how do we know that internal audit, these guys are working properly? Then there's an audit committee whose job is to monitor and oversee the performance of audit committee. So you see the link, risks, internal controls, and then for internal controls we have internal audit, and for internal audit we have audit committees. This is just to give you a high level understanding of what our internal control is, or what does internal audit do, or what does an audit committee do. Okay, but the most common question so far I've seen is identify the weaknesses and give recommendations. Again, we will use a tabular format and we will assume 3 marks for one weakness, same exactly like the risk management questions. Okay, so let's dive into a question. It is SBL specimen paper number 2, question number 2B. But before that, one professional skill was left. It was called commercial acumen. So we already talked about evaluation skill, which means cover both pros and cons. We talked about analysis skills yesterday or day before yesterday, which means that you must identify the root cause or find out the reasons for variances. We talked about communication skills, in which we need to make sure that the formats are properly presented. We talked about skepticism skills, in which we adopt a questioning mind, we adopt a questioning tone of drafting, we challenge, we use words like I disagree, it's incorrect, it's inappropriate. The last one is commercial acumen. It means here you have to just show the examiner that you have some business sense. Commercial acumen means you have a commercial sense or a business minded brain. And you know, a CFO needs to have a business minded brain, no? Obviously, a CFO requires that to be a business minded person. Otherwise, how he will prepare the budgets, how he will make the sales budget, how he will challenge the marketing director, how he will make feasibility studies if he doesn't understand the business. So commercial acumen is a very important trait which a good CFO will have. So, but it's easy to score marks in commercial acumen. Just don't talk like an accountant. Don't use accounting terminologies. That's it. Just when you use your common sense brain, automatically you will get commercial acumen marks. But the moment you start talking like an accountant, for example, you start talking about costs first. You don't talk about revenues first, but you start talking about costs first. It shows that you're an accountant and not a business guy, because a good business person will always first talk about revenues and costs are secondary. Okay, these are the little things which will show to the examiner whether you are a hardcore accountant or you understand the business. So you can use words like opportunities and threats, and you can talk about customers, competitors, market share, risks. All these words are classic words to show that you are not an accountant, you are more into business. That is why you are using words like customers and risks, market share, threats, opportunities. These are business terminologies, not accounting terminologies. Okay, so it's simple. So going back to this question, question number 2B. I will close this one and I will open this question number 2B. So this is your CBE platform. Let's read the requirement 2B. 2B is towards the last. 2B says review the effectiveness of the internal controls at Railco using evidence from the minutes of the latest Railco board meeting and any other suitable source. Okay. Review the effectiveness. Does it ask you for a recommendation? Please see, review the effectiveness of the internal controls at Railco using evidence from the minutes of the board meeting and any other source and justify that the chief executive of Railco is failing in his duties to the trustees. So we will not do the CEO bit, but review the effectiveness means that we just talk about the controls. We are not supposed to give recommendations. Okay, otherwise the examiner would have clearly mentioned give recommendations. As I have mentioned many times before, do not voluntarily give recommendations or conclusions unless the question specifically asks you to give recommendation. So it says it gives me a hint to look at the minutes. So where are the minutes? Where are the minutes? Minutes. Ah, this one. Chairman's opening statement, CEO report. There's nothing there, I know for a fact, because we don't have time. Let's directly start here. Please read this first audit and risk committee para and see whether you are able to identify any weakness in this or not. Audit and risk committee para. Your time starts now. We have to find out internal controls issues. Huh? Thirty more seconds. So you understand, but are you able to find the weakness? Why more and more passengers are traveling on our trains without buying tickets? What is lacking here? What control is missing? Let me see whether you're able to identify the weakness or the reason. No, man, just no ticket barriers. Khalas. Do not try to create, please do not try to create. Where does it say no conductors to check? Where does it say no conductors to check? Someone is saying no supervision. Where the hell is this said? It is mentioned that there is no supervision. No ticket control system. Wasim, where the hell did you see this word? No ticket control system. So why do you guys overthink? I fail to understand. The exhibit is right in front of you. It says more passengers are traveling on the trains without tickets, and that is because approximately 40% of the stations do not operate ticket barriers. So what is the weakness? Lack of ticket barriers. Khalas. When would you guys understand to keep things simple and stick with the exhibits? Why do you want to create your own imaginations? Again, the next sentence says installation of ticket barriers, ticket barriers, ticket barriers. So what's the weakness here? Lack of ticket barriers. Please guys, please guys. I cannot make it more simple than this. So how do you draft it? Are you supposed to give recommendations? No. Right, so we will just say, we will give an opening sentence. We will say that following is the, what was the question to be? Control C. Following is the review of the effectiveness of the internal controls at railco. Number 1, lack of ticket barriers. I just copy from this here. Or maybe I would start with saying 40% of the stations do not have ticket barriers. Due to this, more and more passengers are able to travel without buying the ticket. So what's wrong? This is causing huge revenue losses and I'm just picking words from the exhibits. Customer fraud, prevent customer fraud. That's it, done. 1 point done. Now guys, look, read this one and identify what's wrong in this one. She committee's report provided by Chair Kim Lun. She committee, what is she committee? She committee is safety, health and environment. Okay, safety, health and environment. I found some things. So, you know, the number of injuries, the number of accidents, the number of staff injuries have increased in this company since last 1 year. What does it tell us? Why do you think the injuries have gone up? There must be some loophole, the safety measures, the policy procedures, the staff training. There is something wrong somewhere. The controls which have been put in place to minimize these risks are not effective or they are not working. That is why the number of accidents have gone up. Correct? Now, just we can draft it. We will say that why do accidents go up? Because health and safety controls. So, number two. Okay. Another one. What's wrong if the injuries have gone up? Alas, always try to explain why you are saying it's a weakness. You understand the drafting, how you do it? First point will identify the weakness and then you will explain or justify why you are saying it's a weakness. What's the impact? What can go wrong if it's not fixed? Okay. Now, let's read the IT director one. So currently, they don't offer online ticket booking system. And I know this because in the overview as well, it's mentioned. Because we have not read the overview, I'm just sharing this bit of news that this railco, they just have physical ticket booths at stations and they don't offer any online ticket booking system. So now, how is this a weakness, or why is this a weakness? What's wrong with this? If they don't have an online ticket booking system, what's wrong? So it's mentioned here. That if you have an online system, it will positively impact upon revenue and customer satisfaction. Very good. That's it. What about this one? That's one last one. This one. No, no, sorry. Okay, this one. So the chairman informed the board that the HR director was currently in a meeting with the head of Beeland's Rail Workers Union to discuss its recent demand for an above inflation rate pay increase for its workers. Any threat of strike could have serious damaging consequence on the public perception. So in the case, it was mentioned that the staff were not given increments for last many years. So their salaries slowly and gradually slipped away, and their salaries were much behind the market. Why? Because they were not given inflation and increments. And now it's gone to such an extent that the union is threatening to go for a strike if their salaries are not benchmarked with the market. What's the weakness here? That they are not benchmarking or giving increments to the employees according to the inflation and market practices. And what can go wrong if you don't do this? Why is this a weakness? It will create gaps and will demotivate staff, and ultimately it may increase the risk of strikes, which can affect the public perception of Railco. Got it? Do I have any questions? So no chapter, no theoretical knowledge was required here. It was just some common sense to see where is the weakness, what are those things which is causing losses or damages to my company. Anything which causes bad thing or damage or adversely affects our company is a weakness, and we need to plug it, right? So this is the beauty of internal control questions, that it will be purely scenario based, story based, and you have to think not like an accountant but like a business owner, that how I can fix this. Do I have any questions on the approach? There are not two elements. I will allocate 2 marks for each point. 2 marks for each point, because there is no recommendation required. So just a normal point. We have to talk about the weakness only. So 2 marks each point. So the normal approach, first I state the fact from the case, and then I say why it's a weakness. I need to defend, right? Just copy pasting will not get you marks. You will need to add some comment on your own. So I just elaborated on the impact or a reason why it's called a weakness. Very good. I am seeing good points here. Abraham is saying, are we not supposed to adopt a questioning tone? No. It all depends what the examiner wants you to demonstrate in that question. So I don't think, what was the professional marks for? It was for skepticism skills. Ah, thank you, my friend. Thank you. Skepticism means that you need to adopt, so we will just change the way we draft. We will just say lack of ticket barriers. That's a good word, lack of ticket barriers. Uh, Inadequate health and safety. You see, I've used the word not adequate. That's good enough. Lack of online ticket. So I have basically used a negative tone in saying that this is not there, it's lacking, it's not adequate, and because of this, this is happening. So this is skepticism when you adopt a negative tone. So you see these words, inadequate, lack, all these are negative words. Okay, good one. One more question from the same paper on the same topic, internal controls. This is question number 4B. Very interesting question. You will enjoy this. Question 4B. Recommend to the audit and risk committee with justification suitable measures or safeguards which could be implemented by Railco to reduce the level of frauds occurring on the network. And it is commercial acumen. Which fraud? You know, the customers, the passengers, more and more passengers are traveling without buying tickets, and they call this customer fraud, and because of this their revenue is leaking, obviously, right? So now they want you to suggest suitable controls which should be implemented by this company in order to reduce the passengers traveling without tickets. So for this, I would just read one paragraph, Exhibit 2. It will give you a good idea, and then from there we will build on. Just read this paragraph. In the last two annual reports, Railco's directors have highlighted the risk of significant number of passengers traveling without tickets. It has been suggested that this could be due to the fact that Railco does not operate ticket barriers at many of its stations. Railco relies on ticket inspectors operating on train services to check tickets, but evidence suggests that this can only catch a minority of those who evade paying for the tickets. So now the board wants you to suggest 4 or 5 controls so that they can catch and reduce passengers traveling without tickets. Can you think? And one of them is mentioned here, one control. So please write what controls comes. Actually, two controls are there. One is I'm just giving you hints. You see this, and you see this. Okay, now start writing. Tell me, which controls would you put in place if you are the owner of this company? Would you want your customers to travel without paying money? Yes, ticket barriers for sure. Install ticket barriers, and I know that at 40% of my stations do not have ticket barriers. So the first thing is we must have ticket barriers at the station. Nobody should be allowed to enter the station if they don't have tickets. Second point, all of you are saying more inspectors. Very good. So then we should add more inspectors, because it seems that the existing level of inspectors is insufficient to capture the large volume of people traveling without tickets. So we must definitely increase the number of ticket inspectors. Someone said implement online ticket system. Yes, that's a good point, because somewhere in the case it mentioned that because of lack of online ticket systems, people don't have the time to stand in the queue and buy tickets from physical booths, because they don't have online options, and these guys are getting late to reach their office. They don't stand in queue, they just board the train. So even if we add online booking system options, then it can reduce customers fraud significantly. Membership cards, okay. Cameras, oh, interesting. This one, Danish Khan, is very intelligent. He says fine if caught by checker. Not fine, high fine. What do you think? There should be a very strong penalty if we find anyone traveling without ticket. So this will be a deterrent. Okay, more training to inspectors. Where does it tell you that the inspectors are not trained? But okay. Monthly membership, monthly cards. Okay, very good. All right, good. So again, please tell me which chapter, which syllabus, which model, which knowledge area. No, right? So just understanding the business and thinking like the owner and coming up with some business related controls. That is why it said marks are given for commercial acumen. So all these points, adding more ticket inspectors, adding more ticket barriers, increasing the fines, these are all commercial acumen, your smartness, your business sense talking, not an accountant talking. Are we legally allowed to penalize? Of course. If someone sits on my train without a ticket, I will make a penalty, and this Railco is a government entity. So it's a government train, railway train service. So obviously there's no harm in penalizing. Should we make a cost benefit analysis? Amir, now you talked like an accountant, and the professional marks was for commercial acumen, and you lost your 2 marks for professional skills. Having an eye on the inspectors, okay, then you mean to say having inspectors on top of the inspectors? Okay, doesn't seem practical to me. Interesting. Okay, good. So internal control questions are generally of this type, where no bookish knowledge is required. You just understand the scenario and come up. Here I need you to be creative, because now you need to come up with practical solutions to plug the holes. Okay, but do not talk like an accountant, otherwise you will lose commercial acumen marks. Good question. Like it? It was easy, right? Full 10 marks. Okay, the last topic for tonight is project management. Oh, I'm very tired now. Project management. So what is a project? So a project is a special activity which is not part of your day-to-day routine operations. That is why it's called a project, because it is something which you don't normally do on a daily basis. It is something which is different from your routine. It's a once-off special activity which you are doing. For example, if the company is building a website, so it's a one-off activity, right? If this Railco develops a website, it says somewhere, right, in this Railco question that they do not have an online booking facility. So now if the board decides to adopt or implement online ticketing system, then they will need to implement certain things, right? They will need to first develop a website, they will need some IT infrastructure. It's a whole project in itself. But it's a once-off thing. Once it's done, once the website is up and about, the project is completed. So a project is a special once-off task which is other than your day-to-day normal activities. Why are projects important? You think projects are important for companies? Absolutely yes, for two reasons. Number one, my future strategies depends on the projects. For example, if I want to have online business, I need to implement on website and systems in order to avail that strategy. So projects give birth to your future strategies. You need projects to initiate your new strategies. And number two, projects are expensive. A lot of money is used in projects. So since companies have limited or scarce funds, they need to be very careful that they don't spend or invest money in a wrong project which might cause or which might backfire. So projects and project management is extremely important so that the objectives are achieved and the risks of failures are minimized. Got it? Now, how to track a project? Obviously, when a company they initiate a project, let's say I initiated this online ticketing platform, online project, it will take like 6 months or 8 months, assuming, for me to be up and about with a full-fledged website and a ticketing software, online ticket systems and apps. It will take a year. So the board, do you think the board would like to monitor the progress of the project? Obviously, it is a critical project. It's important for the business, so it's costing money. There are some risks. So the board will like to track the project till it's finished. So when we talk about project tracking, there are three things which is monitored: the quality, the timelines, and the cost. Okay, the quality means the user requirements, what the project is about, the deliverables, the features, the requirements. Okay, timeline means the duration, Whatever was timeline was agreed, it needs to be tracked. Cost means the budget. Whatever budget has been allocated to the project, it needs to be tracked. So in order to track a project, every project has 3 legs. How many legs you have? 2, right? How many legs a dog has? 4, right? But a project has 3 legs. Interesting animal. Do you know any animal with 3 legs? Yeah, project. So project always has 3 legs. The quality or the user requirements or the specifications, the timelines, and the costs. That is why it's called, this diagram is called project triangle. So whenever the question says, how can we track a project? Immediately you should say, every project has 3 legs, and in order to effectively track all the aspects of a project, we must track the 3 things. Number 1, we track the requirements or the objectives, we track the timelines or the durations, and we track the costs and the budget. Okay. Now, there are 2 types of reviews. Post-project review, let's not talk about it. And there's a post-implementation review. That's very important. What is the meaning of post-implementation review? Means that once the project is finished and it is now implemented, it is now up and about, it is now operational, then we have to review its performance. Listen, all projects are undertaken with a certain objective in mind, right? There is a certain objective. If there is no objective, no project will be undertaken. So the first and foremost thing for any project is, why are we doing this project? What are the objectives of this project? Okay, that's the starting point. So now, do you think that once the project is finished, once the project is up and about, do you think you need to track the actual results with the objective or the budgeted results? So for example, if the project says that, you know, the online ticketing system will increase our revenue by 1 million each year. So now it's very important to see whether in reality, in actuals, whether your revenue have actually increased by 1 million or not. So you are actually trying to judge whether the project was successful or not. And how you will judge? By comparing the actual results or outputs or benefits with the promised benefits or the objectives initially specified at the start of the project. So this comparison of actual results versus the promised or budgeted results is called post-implementation review. Through this review, we will analyze whether the project was successful or the project was screwed up. Do I have any questions? Yes, very good. Very good. Some good comments. Now, supposing now you are sitting in the board of directors. You are the finance director, you're sitting in the board. And the marketing director wants to initiate a project which requires $1 million upfront. So he wants to start a project which requires $1 million investment, and he wants you to approve this project as a board. So what information would you require as a director in order for you to analyze the project and then approve it? What basic questions pops up in your mind when you want to approve a project? Scope, okay. Objective, very good, Ahmed. Objectives. What's the purpose of the project? Why are we doing the projects? What is the benefit? What is the purpose? Objective, scope. Very good. A breakdown of the three legs, okay. Duration, how much money? What about financial projections, cost benefit, feasibilities, risks? Very good. Financial viability, good one. Key assumptions. Who are the key stakeholders? Very good. Project sponsor, very nice. How monitoring controls, people and human capital required, team members, qualities, constraints. Amazing. All of you are bang right. So all these aspects needs to be clear before the board can approve or reject the project, right? So the next topic is called project initiation document, PID. It's a very, very key document for any project, because it's, as the name says, it's a project initiation document. This document is used to seek approval for the project. You know that no project can start without board's approval, because project requires extra funds, and if it's a big project, then it also requires approval from the shareholders. So how do you seek approval from the board? You make a formal report. It is called, a document is called PID. So you make a formal project initiation document. You send it to the board of directors. They will read this project initiation document, and if they are convinced, they will approve the project. If they have questions, they will come back and ask you questions, or if they are not convinced, they will reject the project. So a PID is the first document based on which the board reviews the project proposals, and then it helps them either approve or reject the project. And what are the contents of a PID? As we just discussed, it starts with maybe a background or an introduction, but more importantly, there will be the project objective, why we are doing this project, what's the purpose. There will be a cost benefit analysis, which includes projections and NPVs and IRRs and feasibilities. We will identify all the key stakeholders involved or affected by the project. For example, who will be the sponsor, the project managers, aspects relating to the project team, the users or the concerned department, if it affects customers or not, does it affect suppliers, does it affect the... So this is a whole list of stakeholders. So we need to identify all the primary and the secondary stakeholders affected by this project. We should know. What about project durations and timelines? It should be mentioned in this document. Is there any key risks? Here are the three legs. Is there any key constraint like human capital, financial resources? Any major assumptions used in the financial projections or in this should be mentioned, and how the project will be monitored, monitoring and reporting procedures, how it will be tracked, progress monitoring. So this is not a, this is just a list prepared by me to give you an idea what are the basic contents of a project initiation document. The idea is that this document should cover all the important basic information which the board requires in order to approve or reject any project proposal. So you will need to remember the contents. It's pretty easy. The objective, cost benefit, key stakeholders, durations, risks, constraints. You will need to remember this. Oh God, any questions? Memorize the format? Yes. Payback will be part of cost benefit, projections, NPV. It's all in the costing side. Yes. Very nice, very nice. What is discussed in the risk factor? The risks. What can go wrong with the project? Obviously, projects are also exposed to risk, right? Some timeline can overrun, or cost can overrun, or you don't find a specialist resource, whatever. What is discussed in the risk? Are risk and constraint the same thing? Yes and no. There's a very slight difference, but they sometimes overlap. So don't get confused. Whatever your mind thinks, you can combine risk and constraint together in PID. What format if required? So if in the question, if the question asks you to prepare a PID, so in the exam, this has been tested 2 times. In the first time, they asked you to prepare a PID. In the first time, they asked you to prepare a PID. How would you prepare a PID? Very simple. Online ticketing. That's the opening sentence, and you will use a table, a 2-column table like this. Okay, you will reduce this, you will increase this. What are the contents? You will say the background and objective and cost and benefits and key stakeholders and duration, key risks and constraints, assumptions, monitoring procedures. That's the format, and you will write background. This project is about developing an online ticketing system for Railco. Halas, objective. The objective is to increase revenue by reducing customer fraud and to increase customer satisfaction. Costs. What will be the costs of online ticketing system? There will be cost of hardware, servers, website development, software, IT staff. All these are the costs which you would expect to see in benefits. Increased revenue, I would calculate NPVs, payback, all this. Key stakeholders, there will be a project sponsor, project manager, project team. Customers are stakeholders. IT department is a key stakeholder. Duration, I would assume 12 months. I'm just making a PID with a common sense, just to give you an idea that it's not a rocket science. Key risk, I will talk about quality risks, timeline risk and cost overrun risk. Assumptions doesn't matter. Monitoring procedures, I would say monthly progress monitoring to by the board. Halas. Say this is a PID. I would just make this column bold so that it looks a little bit sexy. Finished. Okay. And in another question, they gave you a PID. The examiner gave you a complete PID, the contents, and he asked what elements are missing from this PID. Okay, so the examiner gave you a PID in another question and he asked you what are the lacking or missing elements from this PID. So can anybody tell me how you would identify what elements are missing from a PID? If you are given a PID, can you check and identify if something is missing? How would you do that? The contents, very good. Use the checklist, very nice. Very good. Compare with the listing, the key stakeholders, how detailed are they? So just you will, what's happening, man? You will just look at this list and see whether all these things are included or not. For example, in that one, I remember there was no duration. There was no duration mentioned in that PID. So immediately you should say the duration should be mentioned. I remember there was no mention about project team. I remember the objectives were not there. I remember that there was no mention of monitoring procedures. So the background was there, cost benefit was there, key stakeholders was there, but one of the stakeholders was missing. Duration was not there. This was there, this was there, and this was not there. So if you remember the list, you can immediately identify what is missing and you can cover that in your answer. So if you want to do a practice question on PID, you can do this question. It is a easy question. It is specimen paper 2, question number 5B. Okay, you can do this as a homework. So we are now at the very end of our webinar for today. I would like to see some questions before we close out. Where can I get handouts for December? Join my WhatsApp link, and in that WhatsApp group there is a Google Drive, and all the material are there in the Google Drive. WhatsApp group is full. No, I created a new group, so I will write to me again and I will send you a new link. Is it necessary to do EPSM? No, not at all. Forget about EPSM. Tara model, don't worry about it. Tara model is very simple. What is Tara model of risk? It just says that for any risks, there are 4 options. Either you try to avoid that risk, option 1. Second option is you try to mitigate the risks. The third option is you try to transfer that risk to someone else. And the fourth option is you accept or do nothing about the risk. It's a very generic model. So why do you bother about Tara model? Rachel, where is your question? Rachel, your question is gone somewhere. My screen is moving so fast. So you know, briefing memo format. I had told you briefing memo format on day number 2 or day 1 or day 3. So please watch my previous webinar or day 1, day 2, day 3. Sir, when we copy paste, we do it during reading time or when we draft? During reading time. So when you read one exhibit, you stop, you copy paste the information under relevant answers, and then you move on to the next exhibit. Generally, do we have to use models? No. Please listen to my previous webinar. You don't have to submit a numerical value in PID. Yes, there's a cost benefit section, but if you are given a cost benefit analysis, then you can insert. Normally, they don't give you numbers and they don't make it complicated. No, Leiden, please leave Tara model in the PID. You don't use Tara model. You just identify some key risks. That's it. You seem to be in love with Tara model. She's not a girl, my friend. No revision kit, Sana. No revision kit. I covered this on day 1. Please, guys, I feel that most of the questions are coming from people who have not watched day 1, day 2, and day 3. Please watch all these. I have addressed in detail. So please ask more value adding questions. Again, I'm getting. You can download the handout from here. You can download the handout from somewhere here. I think it's downloadable. Gantt chart important? No. This is what, when you study more, you become crazy. It's nothing. Yes, Mahagana, you reduce and remove points. You remember we discussed yesterday that if you are supposed to give 5 points and you have identified 8 points, then you choose the top 5 best points and leave the rest. Otherwise, you will go bad on your time management. Sir, project have limited life? Yes, it's a duration. After that, the project becomes operational. Niharika, I've answered this on day 1. No value chain in pastel. Please, again, don't put model into model, please. Keep it simple. Mahagana, you are overthinking. You are very theoretical. You are very bookish. Bookish students will not pass SBL. Please. All right, guys. Good enough. Today was an important day because we covered 2 most important topics of SBL, which was risk management and internal controls. There is a question on this topic in each and every attempt. So please try and practice these questions, and I will talk to you guys tomorrow. Okay, till then, good night and take care.